Good morning, one and all. I hope you're doing well. So I have three pairs on watch today, and those are Aussie yen, Aussie dollar, and CAD yen. Just to say that I took a loss on dollar yen yesterday, another textbook entry which has played out consistently for me during testing, just very rarely in a live market environment. And that's because over the last couple of years, the market has behaved very, very differently to what it has previously. Okay, but regardless, I'm going to break this down for you. So why was I looking at this? I was looking at this because we had, although we'd near missed to this low here, we'd tapped into here, this area here, where there was a significant move last time around with very little pullbacks until all the way up to about here, I would say. Okay, so that suggested that there could be a lot of liquidity here in that area there, right? So we broke just below, pushed up aggressively, and even on the daily chart, you can see the impulse correction potential continuation to push higher. Okay, if we just zoom in a bit, we had previously I was looking for a reversal from here because we had the start of all of this volume and we were going up to that area by way of a reversal structure. The one caveat being that although we were leading into that area by a reversal structure, we led into the reversal structure via an impulse up. Okay, so when that happens, this can still be an impulse correction continuation to push higher, and this is the running channel within all of that. Okay, and the clue, if that's going to happen, is the fact that what we will do is we won't respond from here, and we will get close to that area, and just below it, we will start building volume. Okay, if we're building volume just below what is supposedly an area of value, then that implies that this is not necessarily an area of value and that this is this is just volume building for a move higher, okay? And this is the running channel just before that, okay? And that's what we had here. Okay, so we had, let's just play this forward a bit. I've just rolled it back so I can show you in real time what was going on. So what do we have? Where were we? It was about here, I would imagine. So we had this. So we had the base of all of this structure, and we had the kind of 1, 2, 3 leading into it, okay? So we had a reversal structure leading into the base of all of this volume, okay? Let's take that off. So if you think about this logically, what's likely happening is that as people are buying this here, they've likely got their stops below here. So typically speaking, as I say, nothing happens all of the time and nothing happens none of the time. If this is the case and this is volume generating for the move higher, and these people who all got long here have their stops down here, then if we tap into the area and we see a washout candle, that is likely, all we need to see for the move higher. So with that in mind, if we just play this forward a little bit, there we go. So that's the entry candle. That would have been better if it was bullish, but regardless, we had wicked through the area, pushed up with aggression, and we had a low test candle there with very little wick above it. Okay, so what I did after that is I placed the trade there. And because it was bearish, and sometimes price can mess about for a little bit longer than it would normally do, I had the stop loss just below the wick. Ordinarily, if this was a bullish candle, I would have stop cropped. I would have put my stop loss through the wick. So I would have measured from here to the wick, to the bottom of the wick, and I would have put my stop loss about 50% in between, okay? But because it was bearish, I just decided to give it a little bit more room, and then literally like that. That is pretty much all that has happened to me for the last 2 years, but there's nothing you can do about it, okay? As I said, the market behaves very, very differently in a live market environment for reasons which remain a mystery to me than what it behaves in testing. And all we have to go on is what we're taught to do and what we've done in testing. And I executed flawlessly once again. So I'm not bothered about that, because I would have been bothered about it if I didn't do what I was taught to do and I didn't do what I've tested, but I did. So that's all that matters. Okay. So you can't control what the market does in a live market environment. All you can control is what you do. And so long as you keep that front of mind, and you're only kind of annoyed, if you want to get annoyed, by your performance and whether you execute it correctly or not, then the market, just as with life, if you just concern yourself with whether you're doing what you need to do, then you won't be beaten up by other people doing things, the market doing things, or scenarios which are out of your control. So trading in that respect is good training, psychologically speaking, for preparing you in life. Okay, but before we go down that rabbit hole, I'm going to move on. So that was dollar yen. That's a loss. That is one that in testing, as I said, has played out consistently. All we need now is for it to play out in a live market environment. Dollar yen. So let's take, because they've changed the bar replay now. Let's take bar replay off. So dollar yen. It's a similar sort of deal on dollar yen to some respects. We have the base of all of this volume. Okay, so we have all of this volume here, this structure, and last time around we started to move off from there. Okay, it was a bit corrective, but we got a significant move off from that area. Okay, you can see that we have tapped into the area. Okay, arguably it's near missed it, but the near miss is negligible. But even regardless of that, we have still pushed up with aggression and broke back above this low. Okay, and we've corrected sideways. We've had the impulse correction continuation, looking a little bit corrective at the minute. Okay, but one thing we have had, you can see here the bullish weekly candles, impulse correction. We can see the impulses and corrections even on the weekly chart. Okay, to some extent. So if we just zoom in, now we do have this bearish close here. Okay, could this be because it's broken above here and coming back down? Could it be coming back down to this area? Well, potentially. Okay. However, if that's going to happen, this would likely be a bear structure to push lower. And as we zoom down, this doesn't look ready to me at the minute. Okay, so what we've had here, if you just look at this, if we just analyze all of this price action on the fly, we've had this structure here which failed. So we had all of this, we break above, push to the downside, it fails. So that is a failed bear structure. Okay, then we zoom into this piece of the puzzle. Why did it fail? Likely because the higher time frame took over. Okay, so the higher time frame will often override the higher time. The lower time frame will often the higher time frame will often override the lower time frame sentiment. Okay, the lower time frame structure. What I'm interested in here is that we have this 1, 2, 3, which taps into the base of all of this consolidation. So again, we have the near misses here. If people are getting long here, many of them would have had their stops down here. People got long here, stops down here. We finally tap into that area, we break just below, and then we push up. However, we've moved up correctively. So because we've moved up correctively, and these conditions that we're trading through at the moment, likely to do with the tariffs and so forth, they are the most corrective conditions, in my opinion, that I've ever traded through. So we're having to do a lot more deciphering and make sense of the structure. So because we pushed up from here, we did so correctively, and we've pushed back down and retraced more than 50% of this move. This could be something like this, okay, which then becomes a bear structure, which then pushes lower, and then this whole thing becomes a failed bull structure, okay, and then we end up pushing back down again. However, at this moment in time, this doesn't look ready for a move to the downside. And I personally wouldn't be trading it because this correction is above all of this. Okay, if I was going to look to get short, I would want to get short somewhere down here. You know, I want to see a clear change in sentiment. All the while we're contained above these lows and above here. This is the buy is still in play, as it were. But how do I not get trapped into that potential bear structure? Well, what we do, quite simply, is we wait for an impulse up above here. If the market impulses up above this area of interest, as I've got it marked, and then we see the consolidation afterwards, then that is the market showing its hand to me that this structure to the upside is still playing ball, and that this was a failed bear structure. Okay, this was not a bear structure. And then that consolidation after that, I would be able to get long on the break or within it for something in the region of 3.5%. And then I would target the next high there, because there was a significant runoff from that area last time around. So there could be a lot of volume there. And up to that area, we would have something in the region of 11% to work with. So unless that alert triggers that I've got there to alert me to the fact that we're pushing up to this area and potentially breaking above, then I don't need to check this pair at all. Okay, so that is Aussie yen speeding up ever so slightly. Dollar yen, Aussie dollar rather. This is not one that I'm anticipating shaping up, but I've got it on watch just in case it does. Okay, so on the higher degree, this to me looks like we've washed out. Look at what we've done here. We've washed out all of that liquidity, pushed up, and then potentially long term, this could be a consolidation sideways to push higher to start tapping into these areas. Okay, perhaps, or this little consolidation here. Okay, which was a little consolidation after the completion of all of this. Okay, so regardless, we could be seeing a move to the upside longer term. However, what we could be seeing as well, so if we just look at this, even though this could be an impulse correction continuation to push higher, we may, if we get the opportunity, be able to capitalize on a move down to here to the base before that starts to continue. Okay, so before we get the correction continuation, or the continuation rather. And the clue for me that that might be the case is if we just analyze this price action. So even though on the higher degree it does look like we're pushing higher, this is a very deliberate structure for something, for price to form something this deliberate on the 4-hour chart, which by definition takes a long time to form. This is very deliberate. So what if you look at what we've had here, and I was predicting this last night. So we have the high here, we have the gap to it. Okay, what does price do? It comes back up. It doesn't just come back up. So when people are trying to sell here, many of them will have their stops in this area. Stop loss is there. Okay, we then get to that area by way of a 1, 2, 3, where the 1 and the 3 waves are of an equal length. Okay, that also implies completion in this area. If we complete in this area where we've had the gap and the high, and we tap into it, it's likely that we'll do this. So I did this forecast last night, and that's exactly what's happened. Okay, so we have, and the fact that we have a bearish 4-hour retrace here, I wouldn't be looking for a risk entry simply because the higher time frame to the upside is quite clear. Okay, so I wouldn't be looking for a 4-hour risk entry up here. But if we just unpack this still further, if you look at this, what we've also achieved is we've tapped into that by way of a 1, 2, 3, where we have the corrective middle section here. Okay, so we tapped into that by way of a reversal structure. If people are selling here, many of them have their stops up here. If people are selling here, many of them have their stops up here. So after all of these near misses to this area, I'm not surprised that we did this, wicked above, and then did that. Okay, now what this could be, the other thing I like just to touch on it, is the fact that we have gaps. Look, so we have this sharp move here, and we have 2 gaps here to that low. So if people were buying here, where did they likely have their stops? Down in this area. So what we could be doing now is pushing to the downside to take out all of the stops that were down here and perhaps at that low there before that longer term direction continues. Now what we could be seeing, because this is a 4-hour retrace, which I wouldn't be interested in taking, we just measure this. So we've kind of tapped into almost 50% of this candle. Okay, so this could actually just be, just a pullback, a 50% pullback, and then we drop. Okay, however, that would still be a risk entry, which I wouldn't be taking. What we can see here is that we had this consolidation which failed. Okay, and we've pushed up. So either this is becoming more complex, or we're going to get something like this, which I don't think is the case, because you wouldn't normally see this so high up in the run. But just in case something like this was to form, okay, and what I'm going to do is I'm going to set an alert just there to see if we get a bit more of a base, which is what I'd be looking for. If we get something like this, so a 1-hour non-structured, it would probably be a structured flag by the time it forms. But if we got a non-structured 1-hour correction or a structured one, I would look to get short within it. Okay, I wouldn't look to get short on the break of something that large. Okay, just in case it's something a bit more complex, and then we end up something like that. We push to the downside, and then this becomes a bull structure like that. This would allow me to manage it, but I'd be looking for something like that, and then we could manage this down to that first inflection point there, and then I'll be targeting that low there, the near miss of that low that I just showed you a minute ago. As I said, I don't think you wouldn't normally get something this large as high up in the run if it is going to move to the downside, but just keeping that on watch just to see what happens. So CAD Gen last on the list. So this is an interesting one because we just zoom down. So what do we have here? So we tapped into this. We tapped into this low. We pushed up. Price did not find enough liquidity to push it any higher than where it got to. Okay. And to me, we just analyze this. Where are we? We're on the day. We're still on the daily. Okay. If we just analyze what this is doing, this to me looks like after this daily close here, we've tapped into this area and we've pushed down. This to me looks like a potential move down to this area. Okay. And then, what happens there remains to be seen. But then that would kind of be potentially a reversal structure, which taps into here, maybe for that move to the upside. Okay. To complete this kind of structure. Who knows? But we've had a clear sentiment, a shift to the downside. So it looks quite clear to me that we're potentially coming down to take out that low. Okay. And if we just analyze this on the fly, we have the gaps again. We have near miss to this area, come back up. We have this gap. We tap into it. I am mindful of the fact that we didn't break above. We only just kind of tapped to the area. So I wouldn't be surprised if this actually fails and starts pushing up again. Okay, or what this could be is something like that, which taps into that. We then get that kind of structure and then move to the downside from there. But technically, we have tapped into that area, and we do have a 1 hour consolidation. The only thing about this is if we just look at the sequence, it doesn't normally start like that and move to the downside. Okay, not only does it not only start like that, we just analyze this correction here. We have a kind of correction that failed. Okay, then we break out of that, and then we get this. We don't normally see that much volume at the start of something like this. Okay, and then we get the middle section there. It just looks a little bit irregular to me. So one thing I won't be doing is I won't be looking for a 15-minute entry on here, just because of the fact that we didn't tap the high, how the sequence has started, and this slightly irregular nature of this 1 hour correction. What I'll be looking for, and also just to touch on it, is that I can actually see the lows and I can see the highs. So technically, this is a structured 1 hour continuation. So what I'll be looking for is my rules according to what I look for when a 1 hour structured continuation forms, and that'll be a 1 hour risk entry within that. And then by that point, that would be deliberate enough for me to be able to manage it down to these lows for something in the region of 4.5. And then I'll be targeting that low there just for a simple little range play. And if we just measure this on the fly, okay, so I'm measuring the impulse correction potential continuation to push lower. If we measure it there and we measure it from the break as well, because the volume that's been built can often dictate how far to the downside we move, that would line up mathematically with there as well. So we shall see what happens with this. I'm going to set what time is it now? 8:28. I'm going to set a Google. I'm going to check this in about 15 minutes time, just to see how this is looking. But I wouldn't be surprised, with all these things considered, if this just pops out and then this is either testing that high again or it's becoming more complex. Okay, so we'll see what price wants to do, and of course, if I place any more trades, I'll bring you the result of them. Win, lose, or break even. I'm not one of these people who's going to post pictures of me driving a Lambo. That's not what I do. I post honest things, honest trade recaps, honest analysis, and if people don't like honesty, then too bad, because that's what people have always got from me. But anyway, enjoy the rest of your day, and I'll speak to you again soon.